All right, let's go. Wednesday, April 3rd. Stocks moving higher. Folks, I've been telling you this. I have been telling you this. Frankly, I think I am the only MMT guy who has been bullish. Most of the MMT leaders, whatever you want to call them, the academics, they have been bearish. And that is kind of interesting when you think about it, because it seems to me that they're not paying attention, or they're completely ignoring their own understandings of MMT. There's not much to really debate here. We have record fiscal support. We have a budget deficit now, which is approaching the highest in 7 years. And I know at least some of the leading MMT scholars, they talk about budget deficits all the time. They talk about deficit spending. So, I mean, you would think they would look at that and take a bullish perspective, but they're not. I am sticking to the understandings, the correct understandings of MMT. I have been saying that for a long time. Record fiscal support, fiscal flows, spending, net spending, rising deficits, and also bank credit accelerating. These are classic MMT understandings, classic MMT fundamentals. If you would look at those fundamentals, let me put it differently, if you would look at those fundamentals through an MMT perspective, I don't see how anyone could come up with other than a bullish view of the economy, and therefore a bullish view of the market. And that's where I have been the whole entire time. In November, December, when the market sold off, I told you that was a market correction. We are on track to make new all-time highs. By the way, to the chip makers, chip manufacturers, making new all-time highs today as I speak. So the broader market, the market averages will move to new all-time highs and then some. There is nothing right now in the fundamentals. And again, the things that I look at create the conditions of the economy. These are not data that get thrown off by what has happened in the economy. All right, this is not some kind of a temperature reading of the economy. No, this is the economy. This drives the economy. You can't get more forward-looking than that. And that is exactly what I do. And the work that I put out. The work that I put out is unique. Absolutely unique. So, I mean, I've said this over now, almost on a daily basis. There's no reason to necessarily now belabor the point. You know, and I'll tell you when things change. As a matter of fact, I think it was last week or recently, I said that there could be a setup, a scenario at the end of this fiscal year, September 30th, and at the beginning of the new fiscal year, when conditions may change. And that's because Trump has demanded in his new fiscal year 2020 budget a 5% across the board spending cuts. Now, we don't know if that will come to fruition. Okay, there's no point in making a bet on that now. We have to see how that plays out. Remember, it's a political process. Just because he is demanding that, that is a negotiating position. You start with some demand. Usually, if you're a good negotiator, which he claims to be, I don't know if that's true, but if he's a good negotiator, he'll start with an outrageous demand. We want massive cuts, which is going to kill his economy if that actually happens. But that's his demand. Now, whether that happens or not, we don't know. It's not the time to be making a bet on that. So, but if it happens, and frankly, it's hard for me to see how that's going to happen, because half of all spending, more than half of all spending, is in the so-called entitlement, Social Security, Medicare, Medicaid. Those are automatic, non-discretionary payments. They can't be cut. They have to be cut by Congress has to decide to cut them. All right, and those are political hot potatoes. In other words, nobody wants to cut those because the backlash from the electorate will be huge. So that's more than half. And then when you throw in defense, which, number one, Trump is looking for an increase, and number two, defense itself is often treated almost like a non-discretionary spending item. It keeps going up. Then you're talking about 3/4 of all government spending. I'm talking about well over $3 trillion. So you're going to be at $4 trillion. By the way, why has there not been a bear market? Why has there not been a recession in 10 years? I ought to talk about this because almost daily now I see headlines saying the bull market's in its 10th year. It's in its 10th year. And it's being put out there as a source of astonishment. Like people can't figure it out. Like, why does this continue? Now, I've been telling my people anyway, my subscribers, why, not only why it has continued, but why it will continue. If you go back to pre-2009, remember 2009, we're in the midst of the financial crisis, Obama's stimulus, the $787 billion stimulus, we went to a $1 trillion, $1.5 trillion deficit. Prior to 2009, government spending for years and years and years never got above $2.5 trillion. That supported the economy, but it also made the economy susceptible to the so-called business cycles, or whatever you want to call it. Starting from 2009 on, we have never been below $4 trillion annually. Never been below $4 trillion annually. All right? So, what is that? Like a 40% increase? What is that? We're up 1.5. What am I talking about? That's like a 60% increase. A 60% increase. 2009, boom, a 60% increase, and we have been going up and up and up. This year we will approach $5 trillion. And that is why we have not gone into recession. For whatever reason, and it's frankly a pretty good reason, because that's a hell of a lot of money, $4 trillion plus floats the economy. And with everything that you throw at it, trade wars and oil price crashes and oil price rises and interest rate increases and all the things that have been thrown at it, it has failed to put the economy into a recession, precisely because that is a massive amount of pump priming, of spending. $5 trillion this year. So, and that's not going to go down. And the reason why it's not going to go down is because, as I mentioned before, those entitlements, you're entering into a very, very important period right now with the so-called baby boomers generation. That's my generation, the people born after World War II. They are entering their retirement age. So that means every year the rolls of Social Security recipients and Medicare people and people on Medicaid, that's going to grow and grow and grow. So that is automatic fiscal support that just keeps getting bigger and bigger and bigger. There's giant support underneath the economy that just keeps lifting it up. Now at some point down the road, maybe 10 years down the road, when all the baby boomers are retired, that starts to end, and that ends probably for good, or at least comes way down for a long time. Then that's a whole new scenario. But we could be at Dow 50,000 by that time. Dow 100,000 by that time. I don't know. All I'm saying is the support is there. So that is what is happening. It's not that complicated. It's not. But people will continue to sell the market. People will continue to panic. I had a lot of people, I told you, who canceled their subscription in November and December. I had guys telling me, you know, why do I need to pay you if you're just saying stay long the market? I mean, that is the greatest gift I could tell anybody. When somebody says, you're just telling me to stay long. Yeah, because it's very easy right now. What do you want? To go in and out and in and out for what for? Why? Because you are seeking action. Again, we get back to this, that people don't understand their true motivation of why they are doing this. I'll tell you this, most people, the vast majority of people who think they're in this for money are not in this for money. They're in this for action or some other reason. And some are even in it to lose money. They want to lose money. Maybe they don't understand that consciously, but that's what their motivation is subconsciously. They want to lose money. They want to be losers. They choose to lose. Stop losses. You choose to lose. Nobody makes money with stop losses. So anyway, that's where we are. That's where we are. It's not that hard, folks. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Bye-bye.